It's Christmas Eve, and are we going to be getting a Grinch dump or a surprise Santa rally? Let's find out. Welcome back to FlexCandle, where we read the candles and flex the moves. Right now it's about 1:45 p.m. Eastern time, and the price of Bitcoin is currently at $87,450. We start off here with the weekly chart. This candle closes in 4 days and 6 hours. It's not looking too good. We are below the 80 moving average, which is at 91,194, and we're trying to stay above this 100 moving average at 85,567. That's where we have support. Been telling you guys this does look like a bear flag is forming. The stochastics RSI are rolling over. If we end up losing this 100 moving average by the end of the week, I would expect this to start heading down towards 70k, even 67k, and towards this 200 moving average, which is currently at 56,794. Of course, this probably won't happen in 1 week. It'll take more time, but we have to pay attention to that. Now on the 3-day chart, the stochastics RSI here still look like they want to go up, but we are below the 200 moving average. In order to be bullish, we would have to get back above this 200 moving average. This candle closes in 2 days and 6 hours. As long as we're below the 200 moving average, to me it signifies that we might be heading towards this 200 moving average on the 4th day, and that's currently at 79,779. Now on the 2-day chart, the stochastics RSI look like they want to roll back up. I was hoping that this could be a double bottom. We still have a shot for this, but this candle closes in 5 hours and 15 minutes, and we are below the 21 moving average. If we cannot get above this 21 moving average and we close red, I'm probably going to start expecting more downside as well. That 21 moving average is currently at 89,748. If we could close the candle above the 21 moving average, then we have a shot to go towards this 200 moving average at 101,461. Now on the daily chart, this is looking bad. The stochastics were on the way up, and halfway there we started rolling over. We were not able to get above the 21 moving average. It's been 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's going to be basically the 11th day, almost 2 weeks of not being able to get above the 21 moving average. This is looking bearish to me. This is where I have a head and shoulder pattern that breaks us down to about 77k, and I also have this in a bear flag which already started breaking down, and that bear flag takes us down to about 70k. So right now that bear flag is in play, and so is that head and shoulder pattern. We're basically on the cusp of the neckline. So if we close another red candle, we start going over, this rolls over, I would expect those two patterns to play out. On the 22-hour chart, it's not looking good. We're rolling over. We head over to the 8-hour chart. The stochastics are starting to reset here, but we are still below the 21 moving average. This is not good. This also closes in 5 hours and 15 minutes. Once again, if we could get back above the 21 moving average, that will make me feel a little bit better. And on the 4-hour chart, the stochastics are on the floor here. It looks like we could start rolling back up. Again, anything could happen, like here where we roll over and we start dragging sideways. Now yesterday I was telling you that this could be a possible head and shoulder pattern, left shoulder, head, and if we were not able to get above this 200 moving average, this could be the start of the right shoulder, and so far you can see this kind of looks like that. So right now we're basically on the neckline. This could possibly take us down a little bit lower now that the right shoulder is forming. This could take us to about 84,500. So I'm going to leave this here as a possibility. The only thing that could save us is, once again, if by the time the stochastics get to the top, if we're able to get above this 200 moving average, then I would say that this gets negated. But if we go sideways and we roll over, I would expect this head and shoulder pattern to play out. Now if we head over to the 1-hour chart, we see that the stochastics are starting to get a little toppy. We are below the 200 moving average, so that's not looking too good. And on the 15-minute chart, we've been getting rejected off of this 200 moving average. We have not been able to get back above it ever since we lost it back on the 22nd. So basically, with the stochastics being toppy, I feel like we could possibly roll over. This does look like a nice little flag here. If this is a flag, this could possibly save us a little bit, and this could give us the measured move to about 88,231. So let's see what ends up happening with that. I'm not sure if this is going to play out just because the stochastics are a little bit toppy. Maybe this rolls over, but we have a chance here. So we have a bullish pattern here on the 15-minute chart to 88,000 and change, and we also have this bearish pattern, the head and shoulder pattern, taking us down to 84. It's very indecisive. There's not that much volume today. It is Christmas Eve. Tomorrow is Christmas, so I do expect things to be a little bit slow. I wouldn't be surprised if we just go sideways the rest of the next couple of days. Is there going to be a Santa rally? I think at this point, probably not. unless something starts to happen from Friday on. More than likely, I could see us dumping. So I'm more in a favor of us possibly dumping or going sideways than us really making a rally back above 90, 94K at the moment. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is FlexCandle, where we read the candles and flex the moves. Catch you on the next chart.